Jerry Yang is out at Yahoo as the management shakeup tries to jumpstart the search engine, and the IMF wants to increase its lending power by $1 trillion. Can stocks hold on to any kind of rally? I'm Alix Steel, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alix Steel with TheStreet, and together we bring you the morning call. All right, Scott, so we had stocks on Tuesday. They were up big in the open, and then they faded, but we still managed to end in the green. Is that constructive, or is that actually a worrisome sign?
The only thing worrisome is that we're getting no buy-side follow-through. But then the next day, you do have an up day. You still have the course being laid out. So at this point, the indices have been very lethargic. But underneath the surface, there have been stocks that have had very nice moves. And what I liked is that from an active trader standpoint, is that last year you had the correlation of one. You couldn't be like long stocks. It was either the market was all up or the market was all down. Now you're getting moves from individual stocks and individual sectors. So for those looking for the right price pattern or the right technical setup, you're getting rewarded, and you can actually see it because everything's not moving so fast.
So then what do you do when we come in with an up open and we've tended to fade those opens? What do? Do you want to add to the long positions but add on a little bit more shorts at the same time, or do you need to sell those long positions into the rally?
Well, I manage my positions every day. I've been trying to hold about 8 to 12 positions since that December 20th gap and go. So these gap ups I'm fine with because I'm getting rewarded for taking on some risk. So what I've been doing is every time we gap up huge, I sell a portion of my longs, and then I wait to see the composure of the market in the first half an hour. Then I see where the relative strength is, and then I add to the positions that I already have if they look good intraday, and then also add some new positions as we've seen some new patterns ignite in different sectors as we've been moving forward.
And we're going to get to a lot of those names later in the show, but just very quickly, what are maybe 2 or 3 of the names that you're looking at when you add to those positions?
Well, like yesterday, I added to Apple. Apple took a week off. You remember I was long from mid-December all the way back to the old highs of 426 and change. At that point, I'm like, you know what, Apple could use a rest. So I took off some of my Apple. So last week, Apple was very quiet. This year, it's back in, this week, it's back in play. Whereas when Apple was resting, I was focusing more on like Netflix, more on some of the ags, some of the actual steel names. So I've been rotating around. It all depends on the day and like the 3-day move, because we're getting a lot of nice 1 to 3 day moves where you could take 4 to 7% out of individual stocks, where the indices are just sitting slowly moving up.
And before we get to individual sectors, I just want to go to the chart to look at the pattern we've been seeing since the beginning of the year to see if it actually has more legs. If this, we start higher and then we fade, start higher and then fade, if this will continue. Okay,
so let's take a look at the macro and the micro pattern here. So here's the S&P. Okay, just so you can see on a macro basis, this was the low in October. This was that day to take notice. Remember, we talked about it. That was that outside day. Since then, you have a nice macro uptrend in place. Okay, we put in a lot of higher lows. Okay, oh, the line just left. So let me do it one more time here. You go right there, and you'll see here was your low in October. Here was your low in November. Another higher low in December. And then mid-December, we broke out above this descending trend line, meaning for the first time we broke the series of lower highs, because here you had a high, lower high, not anymore. But what I'm seeing right now is a new ascending channel. An ascending channel, what it does is it creates an uptrend for you to track and for you to stay with. But unfortunately for the bulls, ascending channels typically break to the downside. So if you take a closer look here, you will see here it is. Okay, it's going to the upside, and stay with it as long as it's intact. But if we start to break below this, just say 1285 or 1280 and close below, okay, then you could see a move to maybe make a higher low in January, which could be around 1260. So it could be, on a micro standpoint, a little bit of corrective type action if it breaks. But on a macro, we could test this uptrend and still stay the course for 2012.
And this is a perfect segue into banks, which we really wanted to highlight after JP Morgan kicked off those earnings on Friday. Is the XLF showing the same kind of chart pattern, and do we start to be concerned?
Yeah, it has an ascended channel. It had a great move. I tried to be long the bank starting in December. I was long JP Morgan, Goldman Sachs, and since I'm a bit risk averse, I took off those earnings or those stocks into earnings into JP Morgan. And since then, the banks have been trying to correct. And so far, it's been somewhat of a healthy correction. But if it breaks this channel that we're trying to outline, it could get a little bit worse. So if you look here at the XLF, you'll see, just like you said, a very similar pattern. Okay, if you take, let's take a little step back here. On a more macro basis, same type of uptrend, low, another low, higher low, and then look at this nice move in the XLFs. But here's your ascending channel. Okay, so if this were, just say, to break that 13.5 okay, I would say that, short-term momentum guys like me would get out of the way. I already sold it, but if it were to break, just say 1350, you could get some type of move, to then retest this longer-term uptrend. So you have to measure your commitment whether or not you want to be in there. And if we keep getting reports like, JP Morgan
Right.
and then Citi, and now we'll see what happens with Goldman today.
So let's talk about JP Morgan, down 3%, almost 3% yesterday. And the results, as we know, on Friday were pretty mixed. Trading revenue down 30%, profits down, but consumer loans were up. The commercial banking revenue was up about 5%. So a very mixed picture. The company still has a ton of cash, right? We're looking at perhaps buybacks, a bigger dividend, buying assets on the cheap from Europe. So down 3%, do you want to nibble on those longs, or do you need to stay out to see how this channel corrects?
I think I sold the day before earnings, and I will look to buy back, but not here yet.
Okay.
So if you look at the chart at JP Morgan, you will see, we tried to outline where it would come into resistance. I talked about the mid-October level. So this was, December when you had the nice tight pattern. I started getting long right around the 32s. And then this was the day leading up into earnings, which also matched the prior high. So short-term double top. Then here's your ascending channel that we're now below. I think that the very important area in JP Morgan is going to be right around this 34. So right around 34, I will see if this is the right setup on that day to get long some JP Morgan.
Now let's go to Citi, because as you mentioned, was really crushed, had a terrible quarter. We all know the headlines, but was it overdone? I mean, down 8%. If you look at, we saw $11.3 billion in profit in 2011. That's the best year since 2006. I mean, loan growth was 14%. That was actually better than JP Morgan. So is there a point where you start to nibble with Citi?
I think there's going to be the line in the sand also for Citi. For
But
some
not yet.
reason, I just never traded. I'm always looking at JP Morgan, I'm looking at Wells Fargo, I'm looking at Goldman, Citi. I just, I've been putting on the back burner. But anyway, if you look at the pattern here, you will see yesterday there was no trade off the low. So you had, again, just like we saw in some of the other patterns here, here's like that ascending channel to the upside, which it broke. So that means more downside action, especially since we closed in the lows yesterday. I would say this 2750 will be a big area to watch. If you want to go all the way to here, it could even get down to this 26. So for those of you that want to be in Citi, short term watch 2770, but longer term I think 26 would be the great area or the more compelling area to buy.
And then in terms of Wells Fargo, has now truly solidified its role as one of the top banks, really a standout. Saw almost an 18% rise in profits. Mortgage banking income increased almost 30%. Mortgage origination revenues grew by 59%. Saw growth across the board in terms of investment banking, and is hiring. What do you do with Wells right now?
Well, Wells has been one of the strongest ones.
Right.
It showed some relative strength the entire way. And then yesterday, they sold the news, which is something you don't want to see. But at this point, it's fine. Short term, it's a negative. Longer term, we'll look for an area to buy that back. Look at Wells Fargo here. You had somewhat of an outside day. You never want to see where you open up and then you close on the lows after a huge move. So same way with Wells Fargo, the place to really have bought this was around 27, and now you have this really ascending channel with a topping tail, which you never want to see. So at this point, I would be avoiding Wells Fargo, and if it breaks 29, you could see a retest of this 27 area. So I think you're better off buying it right around here if possible.
And very quickly, 30 seconds, want to hit on Bank of America reporting earnings on Thursday. Expectations are for 18 cents a share. Now, Bespoke Capital Investment says that usually the stock falls about 2.4% on the day it reports. What are you doing to the print?
Well, I'm just going to avoid it. But if it gets hit a little bit more into it, maybe I'll look at it, or I'll let it come out with the earnings. And then if it opens down, perhaps you can get a negative to positive move. If you look real quickly at the chart here, you will see this stock also had a great move. The time to have bought this was right around 580, and then from there you had a move to almost $7, which almost matched the high of October. So at this point, if it starts to break below the 650, I think come earnings day, if it is down, I think you could try some right around the 611 area, and we'll see if it's priced in.
All right, and we are going to be right back with some more quick ways to make some cash today, right after this, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
we wanted to take a look at the haves and have-nots of stocks. So Scott, let's start with Visa. Nearing 52-week highs, we have consumer credit decreased their credit card debt by 11%. That's according to credit tracking and creditkarma.com. That's good news. We also saw outstanding consumer credit increasing over $20 billion, so people spending more and not defaulting. That's really good news for a Visa. Reporting February 8th. What do? Do you need to start taking some off the table?
I think at this point it's acting stronger, but there's this divergence between Visa and MasterCard where you have the have and have not. And right now, if you look at the chart of Visa, Visa's been acting very well. Visa's still in an uptrend. It looks like it's near the highs. I don't think I would be long anything more than a tier 1 in Visa into the earnings. Here's your, your series of higher lows. Here's a low, another one, another one, another one. And now it looks like it's on the verge of breaking out. So at this point, for momentum traders, I wouldn't really be short it. But if it did it before earnings, it would be great. So above this 103, I think you could trade it for momentum. But then if you go to the have-not version of Visa, which is MasterCard, look what happened here when it broke this uptrend. This was actually a good short since the beginning of the year when it broke this area. And now I think for MasterCard, it could be a little bit of a trade down here above 346 for a move for a bounce back to 355 to 360. But this stock is somewhat broken to me, so I just think it's hard to have so much confidence in Visa, the stepsister.
Right, I get you. And then MasterCard's reporting February 2nd as well, so definitely want to be aware of that. All right, let's get to the have of Apple.
Yes.
So really doing well near those 52-week highs here, reporting earnings on Tuesday. Is this a case of sort of buy the rumor, sell the news that we're going to see over earnings, and do you need to start being careful?
I think this is a huge quarter for Tim Cook because last quarter was the first time Apple missed in a while. I have a feeling they're going to do everything they can to make this look as as rosy as possible. It's been, like you said, a great trade since December, and now it's at those highs. So what do? I think for investors, you need to be somewhat hedged. As a trader, I'll probably take some kind of in-the-money calls. But from now till then, I'm going to be long the stock. So real quickly at the chart, this was the first time where we've talked about this all the time, but this was really the pattern to buy right around 395. You had a quick and furious move back to the old highs, and then it rested. And then, I went long a little bit yesterday. I think with some sideways action, I'd love to see it take out the 427 before earnings, so this way you don't have to take the risk of holding it into earnings, but earnings are next week, so we'll reevaluate that on Monday on how to play it that day.
And the channel checks from analysts, of course, about iPhone sales and iPad sales have been very murky and very confusing, so that's going to be an issue as well.
It's going to be tricky.
Yeah. All right, so let's go to Google, the have-not, right? Reporting tomorrow. Into the print, we're looking at net income about $3.45 billion on sales, about $8.4 billion. That means EPS of just almost $10.50 a share. Now, still about 85% of analysts have buy ratings on this stock, and it usually is up about 2% on the day it reports.
I know. It's
just, I know the chart has not been matching up, though, right?
It's a tricky spot. It's been lagging the market ever since it got. I think it's got downgraded again today by Wells Fargo, but this is the third downgrade, so it'll be interesting to see if if it's priced in. I'm going to take some in-the-money calls just because I trade Google all the time, and I'm going to go with the bullish thesis. This stock, I do think, no matter what happens this quarter, at some point this year, it's going to make new highs. But if you look at the chart right now, it's saying some faulty action. This was the really good trade we had in December. Remember, I talked about when it gets above 636, it's going to explode. Well, you had a 30-point explosion. Not huge, but it was nice. And at that point, I took some off there just because I sell into strength, so it was kind of lucky. I don't like how sharp we pulled in and that there's been no bounce here. So I'm long some small in-the-money, calls. I bought it like last week around 625. Depending where we are on Thursday going to earnings, I might add a little bit. But here's your big support. If it starts to break below the 617, you could see some corrective type action. And then the next big major support is down here at 560. So let's revisit this. Tune into my radio on Thursday, right around 3:30, and I'll go over the appropriate strategy or what I think could be one.
And then wrapping it up, want to go to IBM, of course, also reporting tomorrow. We're looking at net income about $5.5 billion on sales of almost $30 billion. That winds up at EPS about $4.62 a share. This is kind of the opposite case here. I mean, isn't sentiment too positive? Like everyone's expecting a dividend increase. Is it just too much mojo now?
IBM also, like Google, hasn't been acting well. Ever since like really Oracle came out, there's been a lot of just say talk swirling on how IBM might be missing also, and I think they might. I might take some puts actually into this earnings.
So maybe expectations aren't negative enough.
Right, which would be good because that would fuel a downside move if you do take some puts. And if you look here at the chart, you'll see that look at this. It's almost like a head and shoulders pattern. Here's the left shoulder. Here's your head. Here's your right shoulder. You have a big neckline here, right around this 175. Someone was drawing on my chart, and I guess thinks the same thing. Not much of a bounce here. So if it starts to break below 175, you have a move back down to support around 160. So at this point, if it can't get going and with option expiration on Friday and no time value, I'm probably going to take a shot and buy some puts in IBM. But again, once you buy options in a scenario, you have to write it off as soon as you do, because options are definitely a bit risky, but at least you know what you could lose is your premium paid. And when earnings are coming out Thursday and option expiration is on Friday, at least there's not as much time there. So if you're right, you can get paid.
All right, let's go to some quick ways to make some cash. Scott, want to throw Goldman Sachs at you. Earnings just hitting the tape right now, earning $1.84 a share. Looks to be above expectations. Revenue, though, just over $6 billion. That seems to be light. Stock is trading almost 2% higher.
Okay, I'm going to look to see if that could hold. If that could hold, I think that's good news for the banks. That's good news for the overall market. It's funny because everyone just wanted to be, everyone yesterday was thinking just short Goldman because JP was negative or Wells Fargo was sold on the news, and it's just the market tries to make everyone look as bad as possible or as difficult as possible. So at this point, it'll be good to see if Goldman could open up and hold. If you look here at the chart, you will see this is resistance, right around this 101, 102. If it can get above 101, 102, then you have 105. But I'd like to even just see it hold the majority of that gap up, and I think that would overall be healthy for the banks and the overall market.
It does seem like investment banking net revenue is also better than expectations. All right, moving on. Want to go to Yahoo. Jerry Yang is out. The stock was popping. Are you trading this?
No, I'm avoiding Yahoo.
All right, let's go to Potash, up strong on Tuesday. Are you adding to any position in this stock?
I'm still long it. We were long in the 43 area, added through 44. I still think it's these higher prices.
And Win, talk about a good stock yesterday, up almost 4%. Same question.
I think Win has bottomed. I'm long it. I started getting long on Friday. I added yesterday, I think above yesterday's high of like 113.60, and you could see about 120 at some point in the near future.
You told me that you were long Netflix, pretty flat yesterday. What are you doing now?
I'm watching it, and I'm trying to stay long some. I think the pattern still looks good. If it starts to get above 99 with volume, I think we see 105 to 109 very quickly.
And what about Amazon, up almost 2%? Is it finally getting some juice?
Amazon, let's take a look at the chart. It's been one of those technical broken stocks ever since last quarter. At this point, there's been some trades here. You had a nice 2-day up move. I think that if it could start getting above this 185 area, you could see some more shorts get squeezed. That's right around here, and above that area, then you see 190, 191.
All right, let's go to Groupon, up almost 2% on Tuesday. Are you playing the IPO game with this stock?
I'm not, but Mark Sperling, who's a trader on the floor, loves it above 1980.
All right, and wrapping it up, it's earnings season. Let's just reiterate your strategy. I know you like to take options into the print.
Yeah, I don't like taking stock into earnings unless I really feel that comfortable, or depending on where we are. What I like to do is I take in-the-money calls, depending on where we are also in the calendar. So this week's an actual good week to do it because, Friday's option expiration, so you're not dealing with as much time premium, which gets sucked out usually after the report. So what's sometimes better, like just say JP Morgan, is they run it into the report, so it takes out the anxiety of not having it after the report. But with something like Google that can gap up 40 points or down 40 points, I don't think you want to be in the stock unless you're long-term. If you're long-term, that's fine. For me, there's enough of a move there that you could take the options, and if you go with the right direction, you'll get rewarded.
All right, good stuff, Scott. I really appreciate it. All right, so it's Wednesday. Happy trading. I'm Alix Steel from TheStreet.
And I'm Scott Redler. Make sure to follow us on the virtual trade floor because there's been a lot of intraday action that's worth pointing out where the money's been going, because it's been really right trade, right time, in order to make money as the indices have been somewhat lethargic.